Welcome back, dear traders. I hope you had a wonderful trading week, and today we're going to take a look at the S&P 500 and anticipate how the next weekly range will likely unfold. If you don't want to miss out on any further weekly outlooks, then like and subscribe, and now let's get going. As usual, we're going to take a look at the monthly time frame. Nothing much has changed. We still anticipate a run higher, but we can see that we had a slight retracement. We have a bearish monthly candle, which didn't close, but it's retracing lower. But we still want to see a upside reaction from this monthly order block coupled with the fair value gap. Nothing has invalidated our bullish bias. We still want to see a run above this high, the buy side liquidity. Now let's move on to the weekly time frame. On the weekly time frame, dear traders, you could get messed up because we're reacting from this bearish volume imbalance right here. You can see last week closed bearish, but we still didn't close inside or below this bullish weekly order block. We traded already 2 times. Here on this candle we traded into it, and last week we traded also into the weekly order block, but nothing, as I said already, invalidated our bullish bias. We showed only a short-term reaction, not a big down close candle. So we still want to see a reaction from the weekly order block coupled with this volume imbalance next week, so we could see a run lower in the first half of the week into the weekly order block coupled with the volume imbalance, which could provide support to then trade higher again and take out buy side liquidity. We created another swing high right here. We have one here and one here, so we're building up liquidity above the marketplace. Retail traders will likely see this as a trend line somehow, which creates more and more liquidity above the marketplace. So first half of the week, run lower into the volume imbalance with the weekly order block to then trade higher to take out buy side liquidity. That's the plan. Now let's look at the daily time frame, which makes it a little bit more clear. Arrived on the daily time frame, you can see we created sell side liquidity equal lows last week, which creates liquidity below this lows. So it's reasonable for price to take these equal lows out, fill in this big fair value gap a little bit more, and trade higher again. It doesn't need to come as low into this bullish order block, but of course it could, because if we take a look at the economic calendar in 1 second, we're gonna notice why it could come as low as into this order block. But as I said, we want to see a run lower below the equal lows into the volume imbalance coupled with the weekly order block, which you can't see here, but just extend it on your charts. And as you can see, the reason why I anticipate a run below these lows is that we took out buy side liquidity right here, ran these highs, and then Friday showed us also a nice reaction from this volume imbalance. Remember, volume imbalances, once they're filled already, provide a nice support and resistance areas from which you can use in your analysis. So we could see first half of the week run lower below the equal lows and then trade higher to take out buy side liquidity. Looking at the economic calendar, you can see it can get pretty wild next week. A lot of high impact news, core CPI numbers on Tuesday, FOMC statement on Wednesday, and then on Thursday we have core retail sales, and on Friday also some high impact news. The Monday is the only day which we have no impact news, high impact news or medium impact news releases coming out, so market could just consolidate or already drop below the equal lows. But definitely on Tuesday or Wednesday, we want to see the run lower below the equal lows with the FOMC statement or the CPI numbers. So on Tuesday, I would wait for 9:30, and on Monday, I would definitely wait for 9:30 to look for a setup. On Tuesday, there will probably be no setup because market would already expand higher or lower at the CPI news release. So there will likely be no setup for us, but if there will be one, I will be looking for one at 9:30 a.m. On Wednesday, market will likely consolidate to build up liquidity for the FOMC statement, but if you're interested, look also for a setup at the New York Stock Exchange Open. Thursday, same thing, wait for the high impact news release to pass to don't get caught up in a manipulation, and then just wait for 9:30. On Friday, it's a little bit different. You should wait for 9:45 a.m. news flash service PMI numbers to pass, and then wait for a setup around 10 a.m. or 9:45 a.m. Eastern time. So this week is pretty volatile, so be careful and avoid trading high impact news releases. Just wait for them to pass to avoid unnecessary slippage and deep drawdowns in your account. The weekly template which I decided myself for this week is the classic Tuesday low of the week. You can see we have a discount market, an old weekly or daily liquidity pool, and it's a manipulation template, hovers above a higher time frame discount array on Monday, then drops into the higher time frame discount array on Tuesday to form the low of the week. This could happen with the CPI numbers. How to anticipate this profile? You need to know the higher time frame discount arrays, which is our daily liquidity pool, the equal lows on the daily time frame. And when the market fails to drop into that array, odds are Tuesday will likely see the drive lower. On London or New York session, we anticipate it to happen with the CPI news release. This is it for the week. If you want to see my pre-session thoughts, then join my Telegram channel, which is linked in the description below. I post all my ideas before I take a trade into this channel. You can comment, ask me questions, and furthermore. Leave me a like if you like this video, and I would say we will see us in the next one. Stay safe, trade safe.